Hey there, folks. Brendan here from Wealth Canada. So the S&P 500 is at an all-time high, and so I wanted to make a quick video just to show my portfolio and to kind of take a look at what things look like right now. So as we can see here, the S&P 500 is at an all-time high. We kind of are at this maximum view here, which is just showing on Google here since 1984. But if we do take a look at maybe a bit of a smaller range here, we can see. So VFE is the ETF that I hold and what I suggest. It has a really low fee. It's in Canadian dollars. You don't have to worry about any currency conversion. And as we can see here, matching the index identically. And if we take a look here, we'll see just kind of at a 5-year period. This is 2020, so there's that huge COVID dip. And then over the course of 2022, a pretty rocky year, but now recovering quite strongly. So dive in here to the Wealthsimple account. So I actually have two different parts of Wealthsimple that I'll show you today. I have the stocks, ETFs, and crypto side of things, which is formerly used to be called Wealthsimple Trade. I don't use any crypto, but I do have some stocks and ETFs in here. And then I also have the managed investing, and that's where Wealthsimple builds funds for you and kind of builds a portfolio based on your risk tolerance. So when we're looking in the portfolio here, we can see balance of 205,640,000. And when we see the three different accounts here, I've got my non-registered account, I've got my retirement account, my RSP, and then also my tax-free savings account. So we'll start off with the tax-free savings account. So balance of $88,503. If we check out all time here, we'll actually hover over to show those deposits. So I started the account here early 2020. I actually had this money initially, so if we check out what I had initially contributed, let's call it around $43,800 is essentially what I had kind of initially deposited. I initially had that money in mutual funds at a bank, and what I decided to do was, it was around the end of the year, it was around the end of 2019, I decided to actually just withdraw that money, and then I waited till 2020 for me to be able to then deposit that money. The reason I didn't deposit it for a while is because I actually was in the process of buying a house at that time, and so I used a part of that money for the down payment, and then I waited a little bit before then I actually contributed 20,000, and then I did a little bit more and a little bit more. So this gray line is my actual deposit amounts, and then the top blue line here, this is the actual portfolio value or the account value. And so as you can see, overall, all time, it's done very, very well, significantly because of these deposits early on here in 2020 and 2021. There was a lot of growth in the market, and so I was able to capitalize on that. And then as we can see here, really strong year in 2021. And then as we go through 2022, then definitely, was not a very good year for investing. But stuck to my guns, kept contributing. The dollar cost averaging on the different accounts isn't always consistent because I might be dollar cost averaging into VFE, but on my non-registered account or my RSP or my TFSA, it just kind of depends where I have that contribution available. What I've been doing though recently is to be more consistent and actually have all the accounts dollar cost averaging at a more steady and kind of like sustainable pace rather than focusing on the TFSA, then focusing on the RSP. But in any case, still regularly contributing to investments, and that's really what matters in the grand scheme of things. So if we zoom in a little bit and just look at the past year, so we can see here I didn't really do any deposits, and then here I did 1,200 or something it looks like. And then starting in August of 2023, that's when I really started doing those regular deposits. So as you can see here, it's a very faint kind of increase that's happening all the way till here. I actually have a whole bunch of RSP room that I got because I left a job, then I got a pension reversal notification from CRA. So I got like I think $20,000 of RSP room. And so I've stopped contributing to my TFSA because I really want to double down and focus on the RSP before the RSP deadline at the end of February. So that's why I've stopped doing investments and contributions to my TFSA. But when we look at within the TFSA account, so I have just under $2,000 in the cash ETF. This is a high interest ETF by Horizons. I can actually quickly pull it up. It invests primarily in three Canadian banks and high interest savings accounts. So it's at Scotiabank, CIBC, and National Bank is where the money's actually invested. And you get a monthly paid dividend that's about 5.15% on an annual basis. So this is really nice. I own this within the TFSA, so it's tax free, the interest that I'm earning. And it shows here I've only made 0.07%, but this is because that's the actual portfolio value or the value of the ETF itself, but what's not being shown here is the dividends that I would have received. For TPE, this is a few thousand international companies, so this hasn't been doing very well. Really, with the Russia-Ukraine war, and then with the Hamas and Israel, like there's been a lot of global things going on that has not really been great for global investments. But I mean, I still have my international investments and holding those for the long term, but they've been very rocky over the last few years. And then I have VCE. This is some of the top Canadian companies. So this has done pretty well, 6.5%. And then VFE, this is the S&P 500, the largest 500 companies in the US. So that's up 18.2%, about $4,500. So that's for the tax-free account. We'll go into the RRSP. Just refresh this because a weird loading thing is happening with the chart. So we'll quickly take a look at all-time. So this is, as you can see, I've been very aggressively investing in the RSP because I want to maximize that 22, I think it's 22 or something like that, $1,000 of new RSP room that I want to kind of catch up on. Because I had a pretty high income last year. And so when I do my taxes, I want to maximize my RSP kind of deduction for that. So the RSP hasn't really been doing super well. I set this account up, I believe, early 2022. So yeah, January right there. And for all of 2022, I mean, it was a pretty bad investment year. And as you can see here, the gray line is above the actual portfolio value. So this account was in negative for quite a while throughout 2022. But then throughout 2023, that's when things started to turn around. So we'll go to the 1-year view. So you can see contributions happening kind of throughout the year and then very aggressively here. So in this account, I have $40,000 of cash. I actually had a lot of Canadian and international ETF holdings. And what I wanted to do is rebalance my portfolio to have more like 75 to 80% US holdings. Really wanted to focus on like S&P 500, and now kind of getting into like the total US market again, and then the NASDAQ 100. So I sold off a bunch of international and Canadian ETFs because they were they were profitable. And so I wanted to sell those off to kind of recoup that money. Now I have that sitting in cash. I was waiting to see if there would be a bit of a market dip. There hasn't been at all. I mean, the S&P 500 is at an all-time high. So in hindsight, I should have started contributing more. But I was just thinking, I want to just hold this cash. I mean, on the flip side of it, I still am doing my regular investing, which is about $1,000 per week that I'm dollar cost averaging into VFE. And so with that, I'm still doing my dollar cost averaging for my regular weekly investments that I'm doing. It was just more this $40,000 that I sold off from Canada and international ETFs that I thought I'm going to just wait to see what I want to do with this. And in the meantime, earning 5% interest. The market's at an all-time high. I'm curious if it'll keep going that way. We'll see. Like I said, I'm still doing $1,000 dollar cost averaging into VFE. Also VUN and HXQ, which is the NASDAQ 100. So I'm still definitely participating in that market all-time high and that growth. What I'll probably start doing is trickling this 40,000 into probably HXQ and VUN, which is the total market. So I'll probably end up doing maybe $500 a week and start to deplete that over the next year and a half. I could do $1,000 a week, but that would kind of deplete that in about 9 months or so. So I'm kind of trying to figure out what I want to do. But I mean, in the meantime, I'm earning 5%, so I'm not too worried, but I do want to definitely get that working harder for me. So with HXQ, I only started buying this, I think, beginning of January. It hasn't been very long, so that's up 2%, which is great. It's earnings season, and so like with Facebook or Meta and Microsoft, like there's been a lot of tech stocks that are doing very well. So I'm not surprised by that. VCE 10.37%, VFE 8.37, and then VUN 1.92. Again, I just started buying this one and this one just earlier this year. And let's also take a look at the non-registered. I'll refresh. It's got this weird chart rendering. So we look at all time. So this one's a little bit wonky because I do big deposits and big withdrawals from this account. So I started this account November 2019. This was actually my first exposure to Wealthsimple. I started with, I believe it was $1,000. It doesn't really let me go that far over, but oh, there we go. So I actually started on November 11th with $1,000. Started playing around with Wealthsimple, getting familiar with the platform, and then decided, yeah, I definitely want to move all my mutual funds over. I'd been thinking about it for a bit of time, and then I just decided to pull the trigger and make it happen, especially before the end of the year. So I believe that I initially had contributed 20,000, which was from a non-registered account, and then I did another 20,000, which was from a non-registered account. So I didn't contribute anything from my TFSA until about the spring of 2020. I ended up doing a huge withdrawal though because I was buying a house, and so I used $20,000 from this for a down payment. And then, as we can see, this is COVID when the markets dipped, but I wasn't worried about that. But I bought my house end of February, so it was like right around this time, and so I actually had to pull a bunch of money out for that down payment, which ideally it would have been nice to actually have a bit more of that cash to be able to buy some more at this time. But then I did do that throughout 2020, especially in the TFSA as well as in this account. And then here we can see deposits. And then just recently, towards the end of 2023, I started actually withdrawing some money from here to then use that to max out my TFSA, max out my RSP. And then I've also started doing some trading on a national bank direct brokerage, which is similar to Wealthsimple. And so I actually withdrew some money to put over there to do trading with, which is no more than 5% of my total portfolio. So when we look at the holdings here, I have CU. I had bought that just kind of on speculation. It's not doing very well. So that's kind of the only actual individual stock that I own right now. I'm just going to hold that till it goes back up. I believe that it will go up, so I don't have any stop loss or anything for it. Because it's only $230, but I'm anticipating that it'll go up over time. And then VCE, so this is up 17.3, and then VFE up 49%. So this is doing really well. I actually bought VFE starting in 2020, I want to say, for I think my average purchase price is like $80 or something like that. So if we check out here, yeah, okay, so on the non-registered, yeah, $80 was my average price for VFE. It's now at 120. And so this has been doing really well. And then and that's actually my only 3 holdings in this account. So that's the 3 accounts here. And then the last thing I'll just quickly show you is I have my Lira account at Managed Investing with Wealthsimple. So a Lira, I always get so many questions about this. Like, what the heck is that? A Lira is a very specific type of retirement account that you can only open if you're taking a pension from another institution. And so I had worked at a bank for a couple of years, and I had a pension that was worth, I believe it was around $18,000. And so I actually was able to take that pension with me, and I brought it over Wealthsimple as a Lira. Or you have to convert it to a Lira, and I decided to bring it to Wealthsimple. At the time, Wealthsimple only had managed investing available. They actually just launched, I believe in the last week, they just launched self-directed Liras. So I kind of thought about potentially moving it over. I mean, the fees are lower with self-directed, and I'm definitely very hands-on with my investing that I absolutely could, manage it myself and it would do pretty well. But since almost all of my money's self-directed, I'm like, you know what, I might as well just leave this as managed and just see how this performs against what I'm doing. So this is the Lira, 20% overall return, which I'm pretty happy with. I opened this Lira end of 2020, so it's done all right. Um, the thing with the Lira is you're not able to even add any money to it, so this really is like a lump sum investment at a certain point in time. I believe it was like, yeah, sometime at the end of 2020. So I'm not able to contribute to dollar cost average with it, which I'd really like to do, but I mean, it is what it is. So this account, I have it set as a 10 growth. I'm 26 currently, and so I'm like, I can withstand any market fluctuations, any thing that's going on. Um, I was listening to one trader who was talking about how kind of the academic world associates volatility with risk level, because by having this 10 to 10 growth, it's very, very volatile. But I would actually argue that it's not really risky. The stuff that I'm investing in is the most successful and most used brands and companies all over the world. Like if you think about, Toyota, and then even like Walmart and SAP software, like these are companies that the world is really, built on, that people use and rely on every single day. And so I think that risk level is a very misleading label to have in terms of when you're kind of determining like how volatile it's going to be, because in my opinion, what I'm investing in here is very not risky. Whereas there could be other investments that are not very volatile, but are very risky. But from the academic perspective, they'd be categorized as like low risk, even though the underlying assets could be quite risky, but it's not as volatile. So I should probably make a whole video about that because it's a bit of an interesting concept. But anyways, I have the 10 out of 10 growth here. If we go to the history, let's see if it'll show me. So yeah, the initial deposit, $18,736.90. And then throughout here, 2022 did pretty poor. But now we're doing quite well. So it's up 20%, made $37.90 off of it. So if we take a look at how that works, about 6% annually. So not great, not terrible. And what I kind of like about it, I really like about the managed investing of Wealthsimple, is that it does have projections. I'll just refresh this because the chart's not rendering properly. Well, it's still not really, but basically there should be a little, or maybe it's just that I'm confused because the app looks a bit different. So I think that black circle is what I'm looking for. So basically, I really like the projections that it shows. So at around 65, this account would be worth like $430,000. I really like the projections that it does here because the self-directed obviously doesn't do that, even though this is also just owning underlying ETFs. But it's just kind of nice to see that. And then this account, I'm not actually able to do automatic deposits or contributions. But if you have a managed RSP or non-registered account or even a TFSA, and then you do set up those automatic contributions, this number here will actually update to include how much your account will be worth with those additional contributions and the returns that those contributions would receive. So yeah, pretty satisfied with this. I mean, even if I kept this account till 70, it'd be worth over $600,000, and then I have all my other money that I'd be using in retirement. So this pension, again, it's like $18,000 pension from the job when I was like 22 or something. So I'm pretty satisfied with, if that, I think I was there, this is like a year and a half worth of employment at that company. And it's going to do pretty well. So pretty impressed with that. But I mean, a huge factor is the risk level of 10 that I have set here. And so I think that for anyone who's in their mid 20s, even early 30s, like retirement's a ways away for you. You can absolutely take on that volatility. And I think it's just really terrible that they label it as a risk level, because if you look at the underlying assets, it's really owning like a third of like the U.S. economy, 20% international companies, 15 emerging markets, about 12% global, 11 Canadian. So it's incredibly diversified, and then you also get about just under 10% of government bonds, gold. So uh, yeah, by my opinion, is like the most non-risky thing you could invest in. But um, yeah, so that's kind of a quick update on the accounts. Let me know in the comments if there's anything that you want me to cover in more depth or explain. Happy to show you around and do a little bit of a tour of Wealthsimple. And maybe one thing I could do is just maybe go into like each different holding a bit more in depth in a future video. So thanks so much for watching.